today we're dissecting one of the most pivotal global events of the year, the US election, and examining its far-reaching impact on markets worldwide with a special focus on Nigeria and Africa. In a world where policies from Washington ripple across continents, every shift in US leadership brings a cascade of economic and financial implications, from global capital flows to shifts in trade dynamics and inflation. To help us unpack these dynamics, we're joined by two outstanding experts. First, we have Nnamdi Nwizu, a leading global financial markets and fixed income strategist and CEO at Commercial Trading Partners. And Nnamdi brings invaluable insights into how global markets may be poised to react and what investors need to watch closely. Also joining us live from our Abuja studio is Wole Adelokun, partner of strategy services at KPMG Niger, who will lend a crucial strategic perspective on how potential US policy shifts could reshape Nigeria's economic outlook, from foreign investment to inflation and beyond. Together, we'll explore what a Trump second coming or alternative outcome could mean for markets, industries, and economies worldwide. Nnamdi and Wole, thanks for joining us on the show today. I will start with you, Nnamdi. First of all, what is the potential impact of this election outcome on your area of expertise? We talk about fixed incomes, we talked about interest rates, bond yields. What should we expect?
Well, first of all, we know that, the last time Trump was around, last time he was president, we had things like tax cuts, huge spending on infrastructure, spending on military, trying to build the wall, to cut off Mexico and co. All of that led to, bigger budget deficit.
Bigger spending, of course.
Yeah, bigger spending. And naturally led to the Feds having to raise rates, at least at the early start, before we got into the COVID period, having to raise rates to try and combat inflation. So now he's coming in when inflation is still elevated. The Fed has started cutting rates, but what that means is that we might start to see a reversal in the Fed, or the Fed slowing down, regarding the rate cuts. We've already seen bond yields rise.
Yeah.
As soon as he was announced as a winner, we saw the US Treasury start to, move up, which naturally means that market is expecting larger budget deficit, and we're going to possibly see global yields not trend down as quickly as people expected, or stay elevated for a while.
Indeed. So that means there's a possibility that this current easing cycle may slow down.
Well, it's very possible, because the Fed would have to react to whatever steps the fiscal side takes in the U.S. So a big possibility.
Yeah, indeed. I want to talk a bit about capital flows in emerging markets, because we always see these trends. They react to either geopolitical events or monetary policy events. What do you expect in terms of capital flows? Do you see any shift in investor preferences for specific asset classes?
Oh, yes. It's very possible. We know that Trump is an America first person, and that means that he's going to always bring policies that are going to favor US-based companies. And what that means is that you might see a lot of the US firms that would typically have invested or moved operations outside of the US start to focus more on the US. We've already heard him talk about raising import tariffs by 10% across. There's been talk of raising tariffs from China by about 60%. And whether or not he goes ahead with it is a different thing, because that would also spill over into inflation once again. But if they do go ahead with a lot of these things, then you're going to see the US companies reduce their flows outside. You've also talked about deporting a lot of illegal immigrants. Some stories I've seen talking about as much as 11 million people. I don't know how they're going to do that.
Right.
If they do that, then that means you also have less remittances coming to countries outside, naturally, of the US. So people like Nigeria might be impacted if they start to deport, the Nigerians who are there and don't have legal status. So if you factor all that in, factor in America first, factor in all the policies that he'll be looking at to benefit the US alone versus the global economy, then you might start to see a reduction in flows. We know that the US naturally controls global flows, right? That goes into Nigeria and most of emerging markets.
Yeah, so that's interesting, because I wondered what the sort of economic ideology around the Trump administration is going to be. But Wole, I'll come to you now again in Abuja, looking at the immediate impact on Niger in terms of trade, investment flow, foreign investment. What do you anticipate will be the major shifts there?
Thank you for having me. Three things, summarily. Number one, there will be a significant drop in terms of trade balance. President Trump has actually confirmed that there will be increase in tariff for import into the U.S. market. That explains that there will be a drop in terms of trade. And if you look at the African Growth Opportunity Act, which will likely will expire next year, there may be pushback in terms of the renewal. That is why Afrexim Bank has started to actually take strategic steps in getting how to lobby to make this happen. So there will be drop in trade. Investment also flow into African markets, and especially Nigeria in terms of trade assistance may actually drop. In the past, during 2016 to 2020, we saw President Trump pushing against aid coming to African country, though Congress push against that, so we're likely to see that. The other thing that may likely happen is inflation may likely go up because as you increase import tariff, then goods becomes more expensive, and inflation goes up. That means rate may actually increase, and if rate increases, that means dollar becomes stronger, and the Nigerian currency and other currency becomes weaker. So those are some of the immediate impact that will happen with the outcome of the election.
Interesting point you made around the trade balance between both countries. I mean, America has, under Trump, pursued a more protectionist stance with regards to trade policy. So it may not even be just a specific bilateral thing between Nigeria and America. But there's another potential policy shift area I wanted to talk about, which is around the US dollar and other key currencies. How do you see that evolving over the coming months?
So over the coming months, what we're likely to see, if you look at, the scenario is very simple. When you increase import duty, it means more taxes, invariably, and then it increases the prices of goods and services flowing into the US market. So the possibility is that prices will increase, which means that inflation will go up. Now, if inflation happens, what then happens is that you will see the Fed increasing rates. Once that happens, then dollar becomes stronger, and that has an impact on other currencies, even including the Naira. So that will be the immediate impact as you think about, in the coming months, what is likely to happen. So it then becomes imperative for us as a country, because dollar inflow may actually drop, and ability to actually defend Naira may become a bit of a challenge, which means that CBN may have to maintain a rate that is actually maintain the status quo or even increase the rate with a view to actually attract inflows into the market.
Yeah, and that's a great point you make around the impact on monetary policy. But Nnamdi, before we come to that, I want to ask you about Niger's vulnerabilities, because we're looking at this discussion in light of what is happening in the US. But we often say we have to take our own destiny into our own hands. So what are the potential vulnerabilities? I think Wole has already highlighted some, but what are some of the others from your perspective?
Well, if we consider the fact that, once again, looking at precedent and when Trump was president, we had the increase in U.S. oil production, which meant, they tried as much as possible to reduce crude oil prices, because for them, that would have naturally lead to lower petrol prices across the U.S. And also heating their homes and all of that. So if that happens, then that means Nigeria, whose major source of FX is still export of crude oil, will be impacted because you're going to have lower crude oil prices. So that's one. Two, reduced aid coming into Nigeria, even reduced aid in terms of security aid. So when you typically have the U.S. coming to help Nigeria fight insecurity, and we know that Trump basically has pushed against all sorts of aids to African countries. If that happens, then Nigeria's ability to fight insecurity increases. And if you now look at the chain, that means possibly continue to have agricultural issues, right? And that means hunger in Nigeria. Take that down again to people being impoverished, which might lead to economic unrest. So there's a whole value chain. So you're looking at crude oil prices dropping, you're looking at reduction in aid, possibly from U.S. companies and U.S. agencies, basically possibly food insecurity, and militants, on the upsurge again, because you have less military aid coming from the U.S. So Nigeria as a whole has to look for a way to react. Maybe they want to focus more on regional policies, trying to do regional trade so that you're focusing less on U.S. and developed economies. Time for us to start to fix our own issues and start to look at exporting other things beyond just crude oil, which is still our major source of export. We also need to consider the fact that a lot of the food we eat in Nigeria is imported. And if the inflation goes up in the US, if they impose tariffs, that means that food will become more expensive in the US. And when they export it, naturally, Nigeria is going to have to pay more for that.
Absolutely.
Which also means you might have imported food inflation. So
yeah, that's a whole laundry list of things to look at. That whole, when America sneezes, the world catches a cold. Some people might feel, well, we're putting undue regard on the degree of influence. But the other dynamic, and maybe Wole, you can also chip in here from a trade policy. We expect the U.S. administration under Trump to come down really hard on China. We've seen the issue around tariffs. It's not even just the U.S., but the EU imposing tariffs on EVs from China. Given that China is a big global manufacturing hub, and Nigeria imports a significant deal of goods and services from China. Any sort of U.S. protectionism that targets China will ultimately affect developing economies. So I want you to talk maybe a bit more around how we can harness some of the regional trade opportunities as a measure of a cushion against some of these coming trends.
Okay, thank you. So there are three things I believe that we can do to actually respond to the threat that we're facing in the coming months. Number one, it's important that we diversify our trade relationship. Fortunately, there have been ongoing conversations between Nigeria as well as China, consolidating on that and looking at other markets where we can actually sell our goods is extremely important. So diversification will be extremely important. Also, focusing on the regional market is another thing that will be extremely important. Within the African market, Nigeria is a force. Though in terms of GDP, currently we're about number 4 relative to the past when we were number 1, but we're still a force to reckon with. So it's extremely important that we focus on regional trade. The next thing is also to actually leverage our strategic advantage. Nigerians have significant gas reserve. What are we doing with that? How do we unlock that potential and enter into long-term, agreement with other countries to actually, export this and earn significant effects? I think the other thing that is also extremely important is that this would enable us to focus on economic and institutional reforms that are extremely needed. And then we have a president that is pro-market, so this is an opportunity to actually, focus on this reform with regards to mitigate the impact while at the same time minimizing the impact on the populace. So that would be, my view in terms of what should be our response to some of these threats that are coming in the next few months.
I'm going to stay on you a bit, Wole, here. I just want to talk about the global central bank response to this and looking at our own central bank policy moves, looking at what the future of Fed policy in the US and those decision outcomes, which we can't really do anything about. We can plan scenarios around that. But how do you what should be the strategy of monetary policy authorities here in Nigeria now, considering this development in the US and what the next cycle of rate cuts or increases from the Fed might be?
Okay, given the potential increase in inflation rate and the possibility of the Fed responding with an increase in interest rates, from a monetary standpoint, it is extremely important that we maintain the status quo. And I'm sure that within the CBN, we have, smart experts that are actually watching the trend and looking at what is happening. So over the coming month, the expectation is that we're likely to have, maintain the status quo and a possibility that the rate actually may have to go up. The other thing that is extremely important is that this must be supported by the fiscal authority in terms of ensuring that we dismantle barriers to growth, we dismantle all the cost element that is impacting infrastructure and productivity. So with regards to monetary, what we're likely to see in the coming month is the central bank maintaining the status quo, ensuring that the rates, is either hike with a view to attract portfolio investment into the country. But this cannot be done in isolation. The fiscal authority must also be ready to provide the enabling environment and support the monetary authority as well. So our view is that we expect that the Monetary Authority will stay alert and respond strategically to ensure that we're still able to defend the Naira.
Submissions, but Nnamdi, do you agree that the CBN should maintain the status quo? But the question then is, what is the status quo? Because I thought we were moving into a period of potential staying, holding rates, or maybe even easing. But it doesn't seem like the inflation signals in Nigeria are pointing to an easing just yet. Can you maybe comment on that?
I mean, interesting question, because the last hikes that we saw from the central bank was totally unexpected.
Was it totally unexpected?
For most market participants, most people thought they were going to hold off. In fact, if you had spoken to most dealers in the market, most bank treasuries, I would say most people expected by September, that central bank would start to ease, or at least maintain, right? But we saw the increase, unexpected. 500 basis points increase in CRR was a big shock to the market, most market participants. I think there's a limit to monetary policy, and I've said this a few times. I think that there's only so much that the central bank can continue to do. The one thing I say is, look, by the time you hike rates and you sell treasury bills and almost, to foreign investors at, effective yield of about 30%, when you're going out in a year's time, someone that came with $100 million is going to take out $130 million. Yeah. That means they're going to have
returns.
Yeah, but it also means they're going to have pressure all over again on the currency. So the question is, when does this stop? So we need the fiscal side to act. I mean, I can understand central bank's point of view to an extent. For them, we can't be seen to be easing when inflation is rising. So they need to try and do something. But I think the focus has to be on fiscal side doing that. I think we're practically at the limit. 50% CRL is...
when can we go from here? And we want to lend to the real economy and credit. And I guess the point must be made, Nnamdi and Wole, that we can't be seen to be easing if inflation is going up. But if rates are going up in the US, we're almost in this game of yo-yo where we want those capital flows to stay and come, so...
And that is it. So you keep rates high, so and you keep offering them 30% so that they don't go out. They don't go out. Because if your rates come down, then people will take profit and go out. And then you have to cough up a lot of the reserves that you've built up to try. And so it's a tough one.
Which goes back to my point about ensuring that we somehow take our destiny into our own hands by dealing with other structural issues that can reduce the need for this constant yo-yo. But I want to come to a final segment now, which is really around oil price implications and market volatility. And I'll start with you, Wole, before I come to Nnamdi. Do you think in response to potential volatility in oil markets, given what we see with geopolitics in the Middle East, slumping demand in China, I mean, what is your sense around what the impact on oil prices might be from the current U.S. policy scene?
Well, it's actually difficult to predict. There are two scenarios that are possible. One scenario is a situation where President Trump invests significantly in energy, and when that happens, that may likely drop down the price of crude oil. If that happens, that means the ability to earn, the needed FX and revenue to fund government expenditure may be impacted. The other scenario that could happen is sanction and geopolitical tension could actually increase the price of crude. If that happens, that enables us to earn more revenue to fund government expenditure and support the economy, but also has inflationary effect, because as you think about PMS, which is the feedstock to the PMS is crude oil, and it is extremely an international traded commodity. Now, because it's traded internationally, it means that it will increase the price of PMS, and it could also lead to inflation. So as you look at the outlook for the future, I mean, anything can happen. There's a possibility that the crude oil price will increase given geopolitical tension. Though revenue comes to Nigeria, but the side effect is that it could be inflationary because of the impact on PMS.
that's a good point. But, you know, the U.S. under Trump, a Trump administration is all about drill, baby, drill. You know, the Republicans, the Reds are not really pro the climate movement. So they will support more exploration, more drilling. So this could actually have an impact on oil prices in terms of supplies. But it's understandable because of energy independence and security. So how do you see this playing out from Nigeria, even based on some of the things that Wole has said?
Well, I mean, I said the same thing earlier, that you might see a reduction in crude oil price globally if the U.S. starts to build up their inventories and they have the shale guys ramping up production all over again. You might see OPEC try to respond by possibly some cuts or further delaying the increased output that they were supposed to. I mean, initially it was supposed to, I think, November or December.
Yeah.
That has been delayed.
That,
yeah, so if they see the U.S. start to ramp up, that delay might continue, or you might even see Saudis, like last time, where they unilaterally on their own decided to cut their own production a little bit. Nigeria, I mean, it's like the same story we sing every time. We need to figure out what else to export apart from crude oil. We can't continue to rely solely on crude. If not, we are still at the mercy of, you know, the U.S. and, you know, the global politics around crude oil prices and go. If it does happen, and crude oil price does go down, then naturally budget deficit becomes a problem in Nigeria. You might start to see increased borrowing once again, even on the USD side, which naturally would be a problem for us because at the same time we expect the dollar to strengthen.
So that's a double whammy.
Yeah, because your cost of debt starts to rise again. And if you now factor that in together with, you know, higher budget deficit, which means you now need to borrow a lot more, it's going to be going to hit the economy pretty hard.
And I think from a budgetary and national planning perspective, probably a bit more conservatism in our budget assumptions going forward because of this new policy shift. So just finally, big overall positive outcome of a Trump administration on the global economy. Just quickly, is there anything we can expect positively from this outcome?
Well, possibly teach other countries to become a bit more independent.
Okay.
If they do slam tariffs on China, then that means China will have to look to other countries to export their goods.
Yeah.
And in doing that, they might have to, you know, come down with their prices or come up with more favorable terms, which could help the global economy because only a big chunk of their exports goes to the U.S. So that could help the global economy. And you might also see other countries start to, you know, unite, some sort of unification where they all come together and start to, you know, look for ways to combat the U.S. influence, which might help other global economies.
And maybe this is where the BRICS countries come in. Interesting, fascinating discussion. Wole, thank you so much for joining us. Partner Strategy Services at KPMG Nigeria. Thank you for joining us from the Abuja studios. And of course, here in Lagos, Nnamdi Nwizu, CEO of Commercial Trading Partners. Well, that's all we have time for on Business Week. I'm Rolake Akikugbe-Fileni. Let's continue the conversations on X. Do have a lovely rest of the weekend.